Joint stock company has a statutory obligation to prepare the final schedule number 3 of Companies Act of 2013, which has been changed from 1956 to this. Which are the 9 schedules are: number 1, share capital; number 2, reserve and surplus. First, slowly you have to learn. You have to prepare statement. They will give the trial balance and adjustment. 7th is the current assets, loans and advances. 8 is the current liability. 9 is the miscellaneous. Hello my dear student, I am Dr. B.S. called by name Dr. B.S.S., Professor in Commerce and Management, Vidhyaashram First Grade College, a Temple of Excellence, MYSURU. I am going to hand Financial Accounting 3, third semester, session 1, favor of B.B.A. The session goes in favor of financial statement of limited companies. Last time we discussed about the partnership and the sole trading concern. Today we are discussing about the joint stock company. We will move on to next slides. We'll move. Financial statement is a formal record of financial activity and position of a joint stock companies. Joint stock company has a statutory obligation to prepare the final accounts. You remember this point? As required by Section 210 of the Companies Act of 1956. Every company has to follow certain rules and regulation in preparation of trading and profit and loss account and a balance sheet. The presentation of financial statement of company registered under the Companies Act, now governed by the Schedule 3 of Companies Act of 2013. Now, whatever the final accounts which we are going to prepare now under the Schedule number 3 of the Companies Act of 2013 only, according to 2013 only, we have to prepare trading and profit and loss account, which is called today Statement of Profit and Loss Account. And same as per the Schedule number 6 of the Companies Act of 1956. This you have to remember. Companies Act, so it has been changed as to Schedule number 3 of 2013, and so many changes has taken place 1956 to 2013. So many changes has been taken. So far we prepare the final account under vertical column, horizontal column. Today we are going to prepare under vertical column. So many changes is we have certain schedules are there. According to the schedule only you have to prepare the final account. Then only the company will be. So here what I am saying, no. Here in the third semester, if you know how to prepare the final account, definitely it will help for post-graduation studies. That is, if you go for MCOM or MBA, consider this will come. If you go for CA and ACS also, you are going to study same type of problem. So, as a teacher, I am saying, give the more importance. No, definitely it will help you in what's called when you go to the higher studies are concerned. So, I will explain now. Here, this is the format. Instead of trading account, we say that statement of profit and loss account. So, in examination, they will give the trial balance. So, trial balance is nothing but it shows the arithmetical accuracy of books of account. So, that should be changed to this format. First is the income, sales. If the sales return is, that should be deducted. Then, other incomes, if there are other incomes are there, trial balance, debit side, expenses and asset, credit side, incomes and liability. So what is the debit side? Expenses and asset, credit side, incomes and liability. Then share transfer fees is income, discount received or commission received is income, miscellaneous. I give some of the example, more things can become, it may be share transfer fees, discount received, miscellaneous receipt, other things can be. Add all these things for this should be added. Here, no, this will come as an A total. Then, second, will come back to expenditure here. This is nothing but total receipt. Okay. Now, expenditure. What is the first expenditure? Cost of goods sold. As per the Companies Act of 2013, how they are in opening stock, add purchases minus closing stock is the cost of goods sold. What's the format? Expenditure, cost of goods sold, opening stock plus purchase minus closing stock is the cost of goods. That is the first one. Then you dump all the expenditure here. So manufacturing, other expense we have been put into one side. Manufacturing expenses, wages in expenditure, power and fuel is an expenditure, director auditing is an expenditure, general expense and expenditure, insurance is an expenditure, bad debts irrecurrent expenditure, RBD is what's the formula? B plus N minus O, bad debt plus new RBD minus old RBD is there. Advertisement in expenditure, depreciation on asset, maybe on building, maybe on machinery, maybe on furniture, salaries and expenditure. If there is any other expenses are there, add to this. From this figure, deduct this figure, whatever the difference comes, that is profit before taxation. So cost of the first sales here, no, you must be very careful here. Sales plus other income, there's a total receipt A. Then second one, no, all these cost of goods sold, all these expenditure should be deducted. You call this as B here, no, the total called is as B. Then A minus B, all other expenses, all where a total will come. Then all profit before taxation, this one, if we deduct, no, A minus B, this is a profit before taxation. If there is any taxation there, that taxation should be deducted. Whatever the difference comes, profit after taxation. Add profit of the last year is there. No, if there is any profit of the last year, that should be added. If there is a loss is there, that should be deducted. Minus appropriation out of the profit. Transfer to reserve, transfer to proposed income. If any transfer is asked, no, you do it. No, whatever the difference is the surplus. This is your surplus. I think you understand. This format you have to understand properly. I will explain once again. See that. What is the first one? Sales. Sales is income. By chance, if the sales return is there, deduct the sales return. That's all. Other incomes, I have given two or three examples. Others may come. Share transfer fee. Share has been transferred from one person to another person is there. No, they're called share transfer fees. Discount received will come. Commission received is there, become miscellaneous receipt is a income. So for this, no, this should be added. That's a total income. You deduct the expenditure. What is the first one? Cost of goods sold. Opening stock plus purchases minus closing stock is called cost of goods sold. Is one expenditure. The other expenditures are, you dump all the expenditure here. Manufacturing expenses, wages, power and fuel, director fees, auditing fees, general expenses, insurance, bad debt plus new RBD, advertisement, depreciation, salary, and other expense. Whatever the expenses are debit side, you put it here now. So here when you come from A, you deduct the B, whatever the difference come, profit before taxation. From that, you deduct the tax provision for taxation, deduct whatever the result comes, that is profit after taxation. If there is any profit of the last year there in the trial balance credit side, add the profit. This is total. Out of that, no, appropriation, no, transfer to reserve is there. If there is any proposed dividend is made in the adjustment on the capital, any dividend is proposed, that should be deducted. Whatever the difference is called the surplus. So this is a beautiful format you have got. According to this format, you have to work out now. Then when you go to a balance sheet, I will tell you, we have got a vertical column. How it will be? First is the share capital. Second is the reserve and surplus. Third is the secure loan. Fourth is the unsecured loan. All these goes to liability side. Which are the liability side are? One is the share capital. Number two is the secure loan. That is the reserve and surplus. Number three is the secure loan. Number four is the unsecured loan. So this will go in the tab of liability side. Come back to asset side. First is the fixed asset. Then we have got investment. Then we have got a current assets, loans and advances. Then we have got a current liabilities. Last is the miscellaneous receipt. So first one, share capital. Then reserve and surplus, secure loan, unsecured loan. This goes to the asset side. Come back to liability side. First is the fixed asset. Fifth one. Sixth is the investment. Seventh is the current assets, loans and advances. Eighth is the current liability. Ninth is the miscellaneous expenditure, that is called preliminary expenses. So it will be in the vertical column, it should be tally. But before that, no, you have to prepare like this. Schedule number one, share capital. First is authorized capital. Write it here. Then issued, subscribed, called up and paid up. Now for issued capital, calls in arrears should be deducted. Whatever the difference comes, that is your paid up capital. Schedule number 2, general reserve, add transfer here now. Then if you have got a surplus, that should be added. If there is a deficiency, that should be deducted. You very carefully have to do it. Then come back here. Debenture, if there is any interest there, that should be added. For a debenture, interest should be added. Then unsecured loan, if they say only a loan means it is called unsecured loan, it will come schedule number 4. Schedule number 5, machinery, if there is a deficiency, that should be deducted. If the landing appreciation, that should be added. Furniture, you have to return. If there is a depreciation, that should be deducted. If there is a motor car, that depreciation should be deducted. Then investment, it may be investment. Another point, no, here if you want, government security will also come. Investment and government securities. Government securities also come. Schedule number 7, current asset, loans and advances, debtor minus RBD, cash in hand, closing stock. If there is loan, only small loans are there, bank overdraft, we can write it here. Then this goes in favor of schedule number 7. Schedule number 8, creditors, unclaimed. So the BP will also come here. Creditor, unclaimed, proposed during bills payable. Provision, no, in the provision for taxation. Schedule number 9, miscellaneous, where the preliminary expenses will become, if there is a return of preliminary expenses minus return of. This is very, very good type of doing the problem. So you must learn all the schedule number 9 and it should be put in the vertical column. See that? This is liabilities and capital, schedule number rupees. First one, share capital, schedule number 1. Reserve and surplus, schedule number 2. Secure loan, schedule number 3. Unsecured loan, schedule number 4. Add all these. This is the total surplus. Then assets and property, here now. Fixed asset, schedule number 5. Investment, schedule number 6. Current asset, schedule number 7. Current liability, schedule number 8. Whatever the figure comes, that should be deducted. Then miscellaneous, schedule number 9. This is called total application. This is called total source. Total source. This is a total application. So much source we are having, so much application we have to do. So what is this? Total is called total source. It is called total application. So this format you have to write. So before going to problem in the next session, so what we have to learn? No, first slowly you have to learn. You have to prepare statement. They will give the trial balance and adjustment. The items in the trial balance should come only once. The items in the adjustment should appear twice. You must be careful. The items in the trial balance should appear only once. The items in the adjustment should appear twice. Regarding the bad debt and reserve formula, bad debt plus new RBD minus old RBD, that you have to apply. Very careful. Whatever the RBD, the adjustment is called new RBD. Whatever RBD in the trial balance is called old RBD. What's the formula? Bad debt plus new RBD minus old RBD, that you have to learn. Then second point, no, here they may say like this, sales. I have given the sale. Here no, sales minus sales return will come. If you have got a return, that should be deducted. Then other income, I have given only 3. Share transfer fees, when the share has been transferred from one shareholder to another shareholder, the transfer fees, the income to company, discount received may be there, commission received may be there. If there is any miscellaneous receipt, that should be taken into consideration. Then come back to expenditure side. Cost of goods sold. What is your formula? Opening stock plus purchases minus closing stock is your cost of goods sold. One expenditure. Then dump all the expenditure. Whatever the expenditure given on the debit side, put on the debit side. So I have given some of the example. If any expenditure comes, manufacturing expenses, wages, power, fuel, director, general expenses, insurance, bad debt plus new RBD, advertisement, depreciation, salary, printing and stationery, postage, carriage outward, all the expenditure will come, other expenses. So from this figure, deduct this figure, whatever the difference comes, profit before taxation. If there is any tax, that should be deducted, that is profit after taxation. If any profit is available in the trial balance credit side, that should be added, that is profit after it should be added. Out of that, no, any transfer fees, any proposed dividend, that should be deducted. Whatever the difference is called the surplus. Once you know the surplus, you have to go for a schedule. Schedule number 1, share capital. Schedule number 2, reserve and surplus. Schedule number 3, secured loan. Schedule number 4, unsecured loan. Schedule number 5, fixed asset. Schedule number 6, investment. Schedule number 7, current assets, loans and advances. Schedule number 8, current liabilities and provision. Schedule number 9, miscellaneous expenses and losses. I will repeat. Schedule number 1, share capital. Schedule number 2, reserve and surplus. Schedule number 3, secure loan. Schedule number 4, unsecured loan. Schedule number 5, fixed asset. Schedule number 6, investment. Schedule number 7, current asset. Schedule number 8, current liabilities and provision. Schedule number 9, miscellaneous expenses and loss. What's your format? Sales minus sales return, statement of profit, sales return minus cost. What's the next one now? Other incomes, transfer fees, discount received, commission, interest on investment I have not given, miscellaneous receipt, all the income, that become the total receipt. You dump all the expenditure. First is cost of goods sold. What is cost of goods sold? Opening stock, add purchases minus closing stock is the cost of goods sold. Then put all the expenditure, manufacturing expenditure, salary, wages, printing and stationery, postage, carriage outward, legal expenses, depreciation, all the expenditure should be dumped out of the income. Expenditure should be deducted. Whatever the difference comes, that is profit before taxation. If there is any tax, the tax should be deducted. That is profit after taxation. Then if any profit available in the trial balance credit side, they should be added. Then out of that, you transfer to reserve, transfer to proposed dividend, whatever the difference comes, that is a surplus. Once you prepare, you go with the schedule. Schedule number 1, share capital. Schedule number 2, reserve and surplus. Schedule number 3, secure loan, that is called debenture. Schedule number 4, unsecured loan. Schedule number 5, fixed asset. Schedule number 6, investment. Schedule number 7, current assets, loans and advances. Schedule number 8, current liabilities and provision. Schedule number 9, miscellaneous expenses and losses. This is the way. One careful point you have to bear in mind now, they will give the trial balance. What is actually trial balance? Trial balance shows arithmetical accuracy of books of account. We have got two sides. One is called the debit side, one is called the credit side. Debit side shows expenses and asset. Credit side shows incomes and liability. What's the debit side? Asset. Expenses and asset, credit side, incomes and liability. If you have got a salary debit side, it's called salary paid. If it is salary on the credit side, it's called salary received. If the rent on the debit side is called rent paid. If it is on the credit side, rent received. So here the items in the trial balance should appear only once. Remember, it should be only one. The items in the adjustment should appear twice. I will give you an example. If the stock destroyed is 10,000 and by chance, if the amount recovered from the insurance company is 8,000, difference is 2,000. 10,000 will come in the statement. That is called showing what's the total here. 8,000 on the assets, current asset side of the balance sheet. 2,000 will come statement of profit. So 10,000 is a stock destroyed. After the closing stock, you show stock destroyed. 10,000. Then 8,000 will come asset side of the balance sheet under current asset. Then 2,000 will come statement of all this expenditure now show loss on stock destroyed. This is very important. Then the problem say creditor paid directly by the proprietor. Creditor paid directly by the proprietor is there. Deduct from creditor, add to capital. You must be careful. Deduct from creditor, add to capital. That is the most important. Next, the question may be asked. Goods have been withdrawn by the proprietor for the personal use, shareholder for personal use. Anything drawn for personal use is drawing, deduct from capital. But it's already there, share capital. That question does not. If they ask, no, you must be very, very careful about this. Then goods purchased for 10,000 not recorded here. If they say what this word now, it's nothing but a credit purchase. Active purchases, then show on the liability, current liability of the balance sheet, creditor for purchases. What is that example? Purchase has been made, not recorded in the books of account, is nothing but credit purchases. Active purchases, then it will come on the liabilities, current liability, creditor for purchases. Good example. Any outstanding active, with the wages outstanding come, active wages, that outstanding will come on the liability side of the balance sheet. If the salary outstanding is there, active salary, then it will come on the liability side of the balance sheet. Opposite is prepaid. If there is any prepaid, deduct from the concerned head. If the wages prepaid, deduct from the wages. If salary prepaid, deduct from the salary. Then asset side of the balance sheet under current asset. This should be remembered very carefully. See, closing stock will appear 2 times. One in statement of profit and loss account, then on the asset side of the balance sheet. You must be very careful. The items in the trial balance should appear only once. The items in the trial balance should appear only once. The items in the adjustment should appear twice. 2 times you have to appear. And you must be very careful about the schedule. There are 9 schedules are there. Which are the 9 schedules are? Number 1, share capital. Number 2, reserve and surplus. Number 3, secured loan. Number 4, unsecured loan. Number 5, fixed asset. Number 6, investment. Number 7, current asset, loans and advances. Number 8, current liabilities and provision. Number 9, miscellaneous expense, where we get preliminary expenses. This you have to learn. That format statement you have to learn. What is the first one? Sales minus sales return. Other income, discount received, commission received, share transfer fees, miscellaneous asset, interest on investment. They should be added. This is a total income, one bunk. Then expenditure. First is cost of goods sold. What is the first one? Opening stock, add purchases minus closing stock. There's a cost of goods sold. Next, second, other manufacturing, other expenditure. Manufacturing expenditure, carriage outward, advertisement, printing and stationery, post and telegram, any expenditure, bad debt, plus new RBD, minus old RBD, depreciation, and any loss on stock, all the expenditure should be deducted out of the receipt. Expenditure should be deducted. Whatever the difference, that is a profit before taxation. Out of that, no, you deduct the tax, that is profit after taxation. Add profit of the last year in the trial balance credit side there. Add profit of the last year, they should be added. One should be added, no, then it transfer to reserve, or appropriation, say transfer to reserve, and proposed dividend should be deducted. Whatever the difference comes, that is the surplus. Once you get the surplus, you go to the balance sheet. First is the share capital. In the reserve and surplus, for reserve, any transfer that should be added, surplus should be added. Secured loan means the debenture. Unsecured means only loan is there, no. Fixed asset, just like land, building, machinery, furniture, motor car. If there is any depreciation, that should be added. If there is any appreciation, that should be added. Any depreciation there, that should be deducted. Depreciation should be deducted. Appreciation should be added, is there. That is a fixed asset. So that is schedule number 5. Schedule number 6 is investment or government security. Schedule number 7, current asset. What are the current assets are? Cash in hand, cash at bank, debtor, closing stock, then prepaid expenses generally. Then current liabilities and provision. Which are the current liabilities are? Creditor, BP, provision for taxation, outstanding salaries there. Last schedule number 9, miscellaneous expenses and losses. Any expenses which have been incurred before the incorporation is called preliminary expense. That should be shown on the 9th heading, schedule number 9. You learn the schedule number 9. This problem becomes so much easy for you. So I will repeat once again the balance sheet schedule. So we have got 9 schedule, which are the one. Number 1, share capital. Number 2, reserve and surplus. Number 3, secured loan. Number 4, unsecured loan. Number 5, fixed asset. Number 6, investment. Number 7, current assets, loans and advances. Number 8, current liabilities and provision. Number 9, miscellaneous expenses and losses. Then the statement, sales minus sales return. Other incomes are share transfer fees, discount received, commission received, interest on investment, any other receipt that should be added. Then expenditure, first one is cost of goods sold, opening stock, add purchases minus closing stock, then manufacturing other expenses, dump all the expenditure, manufacturing expenditure, wages, salary, carry out outward, printing and stationery, post and telegram, advertisement, legal expenses, all expenditure, bad date, plus new RBD, minus old RBD, depreciation, loss on stock destroyed, all should be added out of the receipt. That amount should be deducted. Whatever the difference comes, profit before taxation, out of that, if there is any tax, the tax should be deducted. That is profit after taxation. Add back profit of the last year. Then out of that, if any transfer to reserve, any proposed dividend, that should be deducted. That is called surplus. Once you get the surplus, go for a schedule of the balance sheet. First, prepare the schedule. Schedule number, share capital, you have to prepare. See that how we have been prepared here. Schedule number 1, share capital, you have to prepare like this. Schedule number 2, reserve and surplus, you have to prepare like this. Schedule number 3, debenture, if you have got interest on debenture, that should be added. Schedule number 4, unsecured loan. If the word goes only loan, it is called unsecured loan. Schedule number 5, plant and machinery. If there is any deficiency, so necessary plant and machinery, land and building, furniture, motor, car, all the fixed assets, even goodwill also will come here. Then investment, government security under schedule number 6. Schedule number 7, debtor, if the new RBD, cash in hand, closing stock, prepaid expenses. Schedule number 8, creditor, unclaimed dividend, proposed dividend, if there is a B.B.A. provision for taxation. Schedule number 9, preliminary expenses, written off is there, that should be deducted. So if you learn the format, problem is so much easy, This is nothing but schedule number 3 of Companies Act of 2013, which has been changed from 1956 to this. So many changes we find out. Hope they will give the trial balance, they will give the adjustment. The items in the trial balance should come only once. The items in the adjustment should appear twice. This should be remembered very carefully. The items in the trial balance should appear only once. The items in the adjustment should appear twice. And you have to prepare under schedule. So there are 9 schedules are there. Which are the schedules are? I will repeat once again. Number 1, share capital. Number 2, reserve and surplus. Number 3, secured loan. Number 4, unsecured loan. Number 5, fixed asset. Number 6, investment. Number 7, current assets, loans and advances. Number 8, current liabilities and provision. Number 9, miscellaneous expenses and losses. If you learn 2 or 3 times, this becomes so much easy for you and definite problem here. This is the second problem in the corporate accounting one, and financial accounting also the second problem you are going to face here. I think this is easy. I think you understand everything now. In the next session, we'll start the problem according to this provision and I will explain the problem. If you have got any doubt, you can ask. First, learn the schedule, learn all the 9 schedule, learn the format. And also, you remember only the items in the trial balance should appear only once and the items in the adjustment should appear twice. All the 9 schedule should you remember. You must remember all the 9 schedule and statement you have to remember. Once you remember, whatever the adjustment I'm going to explain, we'll meet you in the next class with a good problem. Till then, goodbye. Meet in the next session with a problem.